of you that don't know me, my name is Folakemi Osho, and I am the general manager here at Oak. And what to expect today? So today we will be talking to two famous people. One of them, I like to say that is my official bragging rights, in the ecosystem. And I'm so excited to have him here and to share his journey so far. So today we will be talking to our guest. Next slide, please. But before we get into that, I will just be sharing a quick, brief intro about what we do here at Oak. So Oak is a community of investors that are backing businesses and building for Africa and for Africans in the diaspora. We started Oak in 2020, and since then we've deployed over $4 million in over 120 startups. Some of them are following around. So we typically invest from pre-seed to Series A. And if we invest in you super early, we'd just like to come on your rounds and also assist you with whatever you might need to grow. We've grown our investor community to over 800 angel investors across the continent that are constantly deploying funds every month. And we have had about 11 exits, different types of exits, but exits. Next slide, please. So yes, we've invested across 12 countries. We have Nigeria, Uganda, Burkina Faso, Ghana, Ivory Coast, Rwanda, Tanzania, and all the likes. These are the countries that we've invested in so far. We invest across Africa and the UK, as well as the US. Next slide, please. Okay, so to our speakers, I'm super excited. Dami has been with us, even at Oak, as an investor for quite a while. So I'm super excited to have her on this session today. So Dami is the she's head of platform and networks at Venture Platform Fund, and she's also a builder and an investor as well. Our second speaker today is Victor Alade, who is the co-founder CEO of Raenest. I'm sure some of you have heard of. You must have heard of Raenest. So we're glad to have you here today. And moderating the session today is Yewande Odumosu. Yewande is the managing partner of Oak Ventures Fund. We'll share more details about that as we move along. So I'll pass it over to Yewande to get the conversation rolling.
Hi everyone, can you hear me? All right, cool. Hi Victor, hi Dami. This is one of my favorite things to do at Hope, to talk to like really amazing people I respect and I look up to and act like, I know what I'm doing. But yeah, nice to have you guys here. Happy you're smiling. I think I have a set of questions for you, but before we start, how are you feeling today, Victor? How are you feeling today, Dami?
Yeah, I'm good. Doing well.
Okay.
Just these couple of things out, but I'm good.
All right. Yeah, I think as a fintech founder, I'm aware of some of those things that can take your attention. But yeah, take it easy. How are you doing, Dami?
I'm good. Long day. It's been busy, but thank God. Very good.
All right. Thank you. So I'll just start. I think the first question is for Victor. So Victor, you have like a popular viral moment in ecosystem where you said you didn't really know any investor, you didn't really know much, and bam, $11 million. And it was like Elijah. What's that story about? But I think let's go back to your first raise. How did you turn non-knowing investors just very quickly into like, okay, I've successfully raised my first few checks? I think if you want to like be candid with us, that would be great. I know that you've answered it in some way, but we promise everybody that this is like raw and unfiltered. So if you can tell us how that went about, that would be great.
Yeah, thanks a lot, Yewande, and it's a pleasure to be here. Yeah, that's basically true. First time founders, probably was like 3 or 4 years before Raenest, I started hearing about fundraising. So it's not something I was familiar with. No prior connection with any investors. Then just as plan to like solve a major problem that we've noticed. When we started Raenest, I think there was no plan to like even do fundraising. The plan was, okay, we can use whatever little money we have, let's build it, let it be running. But then when we started, we realized there's need to fundraise. Two major things we did. First is to think about what are the investors that may be familiar with the problem we are trying to solve, that they can easily understand that I don't have to explain for 2 hours for them to like get what we are trying to solve. We made a list of those investors. And then the second one, which I think it's where the trick lie, I look at the place I've worked who are the investors that have some level of relationship with those places I've worked. I look at the places my co-founder have worked. Are there any investor that invested in those companies? So that when they hear the name that you've worked in XYZ company, it kind of ring a bell, and that will make them to listen to you. So I put my list together, then just try going through the website. Normal application. I don't know about now, but back then most VCs, which that's still the case, they have online application where you can apply. That work as well. So I reached out to couples of investors. So the first set of investors I spoke to, I just reached out to them. They are not my targeted investors, but I want to learn what they think. And then before I reach out to my targeted investors, I will have collected some feedback from them. So I did that. And then now I'm ready to talk to investors that I want. I selected those investors based on their understanding of the market, how influential they are in the African fintech ecosystem, and then beyond money, what can they bring on board? Their understanding of the market. I think the first person I reached out to was not an investor. Ola Oyetayo Veto. I thought, this is payments. Okay, it has some alignment with what we are trying to do. Just check LinkedIn, just send code there. Hey, Victor XYZ, I'm building ABC for creators, for freelancers. These are my background. Are you open to having conversation? Funny enough, he replied maybe within 30 minutes. He replied, I say, yeah, let's have conversation. Come to my office in London. And I went to his office, and that's how everything started. He liked what we were building. He was able to connect with the problem. Yeah, this is a major problem that even we are experiencing with some of our employees that are distributed. And he did an intro to Olumide Soyombo. That was the first time I've heard about like having a conversation with him. Then I didn't stop there. I went to Twitter. I follow Yvonne Bajala. She was involved in some of why is fundraising, why is a company that kind of have some relationship with what we are trying to do. I just reached out to her on Twitter, just DM, can we talk? And yeah, we were able to have a call. He connected me with June, who happened to be one of our investors as well. So those were like the two people that actually started our fundraising. No relationship, just normal DM, try my luck, and they responded. I spoke to Olumide Soyobo. Olumide, I think he did an intro to Ventures platform, and that's how everything started. And then from there, we started leveraging the experience, the investors as well, and that's how the pre-seed fundraising started.
I like how you answered the question. You answered like 5 questions in my head into one. I really, really love, and I love the growth as well. I know that because you've gone through a journey, of course, you refine a lot of things, and some things that make sense looking back. So that's great. I think I just want to ask a quick follow-up before I move to Dami. Obviously, you reach out to these people and things worked out. But looking back, what do you think? And obviously, you don't have to be humble in this answer. What do you think played a really huge factor in the way they perceived you, outside the fact that, okay, you know what, she's building something good? Like, because if somebody reaches out to me, even if somebody recommends, there's a way that I will perceive. So, because I also want founders and other investors to kind of like understand, what do you think they perceive, that made it, progress the way it went?
Yeah, that's a very good question. We had a solution in the market before I started reaching out to them. Like Raenest was already live. You can go there, there's a working solution. So it's not just about I did. And in my email, I kind of put the link to the website. We have some customers that are already using the platform. So that kind of shows it's not just an idea, it has been converted to a product. And you can see how it works. I kind of put emphasis on the co-founder as well. My own background, it's a problem I've experienced, my technical background. My other co-founder has been fintech and is good in growth and marketing. Kind of put all those together as well before reaching out to any of them. And I look at the people I'm reaching out to, what are the things they can relate with? So different message type, different templates. Ola is in payments. You definitely understand the payment term. I don't need to talk as if I'm talking to an investor, but an operator. Yvonne, investor, the way I reach out to her has to be different on how big the market is, how we can make reasonable money from it. So that's investor language, right? They definitely want to make money. Those are the things that I think were helpful, and immediately they agree to like jump on the call. Let's do already. I want to show them what is available. Like this is it, this is how it work. And when I'm doing demo for people, I like to make it free. If you are getting paid from US, this is the account we give to you. You can receive your money in less than a few minutes. If you're sending money to your bank account, it will take 30 seconds. On the call, I will ask for your bank account and do the repayment. You kind of see it as well. Those are like the few things I think it's that help. And then talking about how unique our solution is compared to whatever they've seen so far. And now I think we are the right set of people to build this solution.
All right. Thank you so much, Victor. That's like a mini masterclass. So, Dami, over to you. So good thing is Dami has also been a founder. Dami has built a couple of things, but on the investor side, and obviously this is the last pre-seed question because I know it's seed and series A that we're really focusing on. So if you want to learn about pre-seed, I think Victor has a lot of videos to tell you about that and Dami. And if you want us to bring him back for that, then we'll do another one. But Dami, last question on pre-seed, early stage, just to set context. So when you're looking at a founder that is pitching, I think what people want to know is what stands out for you. For different people, there are different things. For some people, it's pitch, some people, it's team, some people, it's trust, some people, it's market. And I know that investors look at everything, but from your own, I would say, lens or perspective, what stands out for you every time that you're looking at early stage founders?
Thank you, Wendy. I was going to say that I felt like trading places with you, so because of the master class that Victor was already given, and I think it's super important for people that have not met investors before. Just that journey was really good to hear as well. When I met a founder first time, and this is possibly true for a number of us on the investment team and BP, the pitch actually stands out. We started to see how storytelling is important. So a good storyteller, always wows the entire team whenever they're pitching, and even me personally. The way they answer their questions, how do they respond to questions is also very important, because then you can rehearse your pitch, but then when someone starts throwing you questions, how do you respond to that? If there is a team, so they have co-founders, the dynamics between the co-founders is also important. Sometimes you'll see people that are speaking throughout, even when something is for the marketing person, they're the ones talking, and they're not inviting others to talk. It always kind of feels odd. Like there are little things, they might still cross over, but these are things that will just linger at the back of your mind, that what's going on here? Do they like each other? And then I think another key thing for me is, did I learn something new? So met with some founders recently, and after the pitch, I was like, I really enjoyed that because I left feeling like I learned something. So they really know their stuff, and I learned something new from listening to them. So I would say those are the things, and a lot of this is around the pitch and how they answer the questions and the dynamics when I meet with them or when as a team we meet with them at BP.
All right, thank you, Dami. So I think I will stay with you and just go right into like the heart of today's topic. So a lot of people say seed and series A. Founders are like, I'm going to raise series A, I'm going to raise series B. These people raise 200, these people raise 20, these people raise 5. I think question is, in today's ecosystem, not yesterday, not like 2 years ago, not 2020, 2019 or 2020 COVID. In today, like if we're saying what's the major difference between seed and series A raising money? And so I'll ask both of you, but Dami, from an investor point of view, what would you say is like the major difference in seed and series A stages?
So For one stage, I would say that for the seed stage, I mean, yeah, it's good that you say in today's in today's fundraising climate. So one requires more proof points than the other, obviously. Series A, for example, in our market, the investors would expect that you've reached product market fit and they can see that, like from your retention, from your growth and everything, they can see that. In seed, they might be more lenient in terms of where you are, and okay, maybe you're still figuring things out. We can see some traction, but maybe product market fit has not been, hit completely. You can also expect that in Series A, you might be, and even now, even in seed, but mostly in Series A, you're looking at a price round. So the time it takes and also the conversations and the terms, is different. And sometimes you find that people are not necessarily prepared for that. So, and they've not like spoken to their lawyers and all of that to prepare themselves for that. So that's another thing that you can see that is different. And then of course, in terms of the metrics, what is expected. So now I know when we spoke to some Series A investors recently, you're looking at ARR from $2.5 million and above. When we checked 2 years ago, it was around $1 million. Now we're having conversations where the expectation is 2.5 for Series A and above. Again, for seed, it will be lower than that. So these are some key differences between, say, a seed round and a Series A round.
Okay, Victor, same question from Hannah's perspective.
Yeah, so yeah, we can look at it from metrics, product, and then market as well. At pre-seed/seed, I think there is less focus on traction. Like there is focus on it, but less focus on traction. The major focus is on, do you have a viable product? Probably you can just be an MVP, and that can actually get to like pre-seed, seed stage, right? And then focus on the money you are raising. How will you use that to build the main product, and how do you plan to sell the product? But for Series A, we believe by now you should have traction. Is now how can you increase the number of customers you have? It's not that how will you get customer. There is belief that you need to have customers, not just free customer, but paying customers. What's the plan to take this customer from 10,000 to 500,000? If your TPV is 1 million, what's the plan with this money every to take it to like $10 million? And who are the people you have in your team now? And who are the people you bring on board so that the money we're giving you, you can use it to power your growth? And then there's focus on your customer retention, depending either you are B2B, B2C, your customer retention, your customer satisfaction rate as well, and then your key growth metrics that you are tracking, like your North Star metrics that you're tracking. How have you been progressing on it? Right, is it that you've been having 5% growth, 5%, 6%? They want to see that growth part. When we're about to start our own Series A, Ventures platform did a program Paths to Series A. We release different metrics, and then we start tracking it for like 6 months before Series A. Are we making progress on gross margin, retention rates, number of users we are bringing on board, different checklist. Beyond that, pre-seed, you don't have any. You might not have any financial statement. Seed, you can have a financial statement, but maybe not well put together. But for Series A, the expectation is you have all the financial statements, everything well prepared, budgets, different thing, your unit economics. You know how you are making money, and how you can move from being negative to like positive. Your cost analysis. How are you getting your best customer? How will you improve on getting those best customer? So there is a lot of deep dive into your entire process, because you've raised it. I think you should be like a year or 3 years. You should have processes, documentation. All those are a lot of things that happen doing Series A. And then more in terms on the money you are raising, how will you use it? If you want to raise 8 million, if you have good investors that want to invest, they want to know, is it 8 million you need, or 5 million, or even 12 million? They want to see it. And maybe your plan on currently now, maybe your plan to profitability. If you're not profitable, what's the plan? In how many years? In how many months? How will you go about it? Those are the differences I've seen in terms of being ready for seed and being ready for Series A. How much revenue is expected? That depends on if you're in AI now. If you're, they're like differences. There are some different. There are differences depending on the industry and then what
Yeah.
investor is saying in the market as well.
Yeah. And can I add, just to clarify, I don't think you would find a lot of investors that do MVP at seed, probably at pre-seed. You might find maybe some, but I don't know. Let me just say you may not find. So it's better you have the product at seed stage, then pre-seed you can do MVP. And like Victor said, didn't want to deep dive into all the metrics, but we had like how many parameters? Maybe about 40 or 50 parameters that we had put together because we had asked Series A investors. We had to update it recently. Like I said before, it was 1 million when we did it around the time for Victor, for Raenest, and then now it's 2.5 when you look at ARR. But there were different metrics: gross margin, retention, CAC versus LTV, all of those things. We had asked like, what is the expectation, even in terms of your shareholding as a founding group, what should it be at that time? I think a lot of them were like, maybe if you own at 50% at the time you come to us, that's better, or 40%. That's a better conversation than if you own less. Of course, the Series A folks will be flexible where they need to be. I think one of the things we realize is when people really want the business, they will start to overlook some things. When people want to really get into the business, they start to overlook some things. But before they get to that phase, it makes it easier if you have some of these things, sort of sorted, or at least to a large extent, you're doing well. So yeah, again, it depends on industry. They also look at, I think at Series A, one thing again is they will look at where you are in the market. Like, are you maybe not a market leader, but are you an emerging market leader within, either a market leader or emerging market leader within the country that you're serving in? If you're in multiple countries, what's your positioning within your core country versus the other countries? That's another thing that they could look at Series A that they will look at seed. Profitability, a number of them said paths to profitability should be clear between 18 to 24 months. How would you get there? I've heard some founders say, some Series A folks have said they should be profitable. Now, I don't know if they'll say that outside, but I've heard that some of them have said that. I know that sometimes when you're profitable, it helps the conversation. So again, you're dealing with human beings, you don't really know. I think outside it, a number of people say path to profitability needs to be clear. Internally, of course, if you're profitable and someone else is not profitable, you might have an edge over the other person. It's just how like human nature is, but yeah.
Thank you, Victor, and thank you, Dan. Then I'm going to come back to you, but first, Victor, quick question. So I think in terms of pitching, and this is also for like early investors to understand as they support founders, in terms of pitching during your pre-seed and pitching during your Series A, like what would you say for you the biggest difference and the biggest learning points? So I know you've touched on risk, talked on financing, a bit of how the due diligence is done. But for you personally, what was it? Was it way more people to talk to? Was it longer cycles, or was it something that nobody has even thought about was like the biggest difference for you? Was it I don't know, what was that jump? Because I think a lot of early founders don't envision the journey they are going on, and it's not to scare them. It's like, okay, there's always opportunity to learn and people to help you, but you need to know the kind of journey you're going on, so that when you see something online and you say, oh, this person raised $11 million, it's not just, oh, because they have X. So for you, what was that in terms of pitching pre-seed and Series A? What was like the biggest difference for you?
The biggest difference would be in terms of mission and vision. I think that's something you need to figure out before you start talking about Series A. because that's what we drive the way you pitch. At Proceed, the vision might not be too clear, right? You just know this is how we go about it. But before you get to Series A, the vision and the mission need to be clear. If you have to do dry fasting for 100 days, you have to do that and get that clear. And when you have that, that will tailor how you pitch, because your mission depends where you'll be in 5 or 10 years. At Proceed, people might not really bother. So at Proceed, I'm preaching about in the next 6 months to 1 year, this is what I want to do, because that's what you're using that money for. Just get the product up. But for Series A, you are pitching on how your company can be the leader in like 5, 10 years. And then the investor, you are collecting their money as well. At that stage, they're thinking about their own payback as well. So that's like the major differentiation. And what you've seen in your Proceed, you might not have a full idea of the market, but the data you've seen as a founder for Proceed and Seed should give you an idea of your market. You now need to understand your market fully. This market you are, will it take you beyond this Series A? If not, you should have a plan that these are a plan to expand this market. What is missing in your team today? Let's say you need like license. What's the roadmap? Or now you can get a license. You have to be clear and concise on what you need to do, when you will do it. And that should drive your pitch. Investors, they have their own feedback, their own question they want to ask, but your pitch can actually make them not to ask that question again. Probably there is a way you've talked about it, that this is what we plan to do. These are the risks we've seen, and these are the ways we are going to mitigate those risks. Those are the major things I noticed, right? We have to sit tight and see, is there a way we can present Raenest differently after to see who are the other people in the market? Who are the people that they might not be your direct competitors, but investor will ask you, okay, what about A? What about B? What if A decides to like do this? So your pitch should be structured in a way that you differentiate yourself and how you can win that market ahead of other competitors.
All right, thank you, Victor. Like both of you are giving us master classes. So Dami, I'll come to you, and just like off the question I asked Victor, from your own experience and things you've done, what's like one or maybe one or two things I think founders underestimate when moving from now seed to Series A? So they're like, okay, we think we're ready to raise our Series A, and you're like, you're really underestimating this thing. You know, what are those like one or two things I think that they underestimate?
I think the first thing would be the preparation before the Series A. It's interesting when I heard Victor talking about what he did for Pre-Seed, because he actually did some similar thing for Series A, which is had a list of investors that you like, have the ones that, they're okay, but they're not like your main target. And then you're speaking to them at different points and you're actually picking things that they are looking out for or they would want to see. So we had like series of different conversations even before the start of the raise. I think that's really important. I think the other thing that's probably underestimated but important is how much do you want to raise? How flexible are you? What valuation do you want? How realistic and flexible is that, right? Before you actually go out to raise. And having the number and having flexibility would help the conversation when either it's getting a hot conversation or you're now in negotiations. I think it helps you really prepare. I know that with Raenest, for example, there were conversations around what valuation will make sense at what ARR, and all that was before the actual launch of the raise. So just having that information at hand and then having your own sort of ranges and cemented values would really help when you're speaking to investors. I think the other thing that I've seen is just the price round that I mentioned. I do think that it's good to have conversations either with your legal team or with your lawyers. What are the terms that I should be very strict on? As in, what do I need to know? What are the terms that I should be relaxed on? Because one thing you don't want to be doing is negotiating amiss. you don't want to be negotiating what is not relevant, and you are leaving the one that is relevant. And the best way, we are not lawyers, so nobody is saying that you should know that right off the bat. But if you speak to your legal firm, then you will go into meetings, even when you allow them to talk. If you're having conversations with investors after, you know what to negotiate on. You would know the things to pick, right? And just focus on that, negotiate on that, and the others would rally around. Like the other parameters will be fine if you can just win on this particular thing. So I think those are the three things that I would say. The preparation is important. Knowing, in addition to vision and mission, like what do you want to raise? What's your flexibility? What do you or your founders want to own? And then the third thing would then be know that it's a price round. There are terms that you should be familiar with. Know the ones you need to negotiate on and the ones that you just need to free, right? So that you are not even coming out as difficult or ignorant or unprepared, which we've seen as well.
Yeah,
Right, thank you.
I can add to what Dami mentioned, which is very
Please,
important.
please.
Precede is basic, just a safe, like no complex. But going for Series A, don't go there with precede knowledge. Try and read. Right, there are different books. One of the books that actually helped me with fundraising is "Be Smarter Than Your Lawyer and Investors," which was given to us by one of our investors. It kind of explained everything in details. What are the terms? You read different terms, and if you don't know them, if you are talking to an investor, which is a tricky situation if you don't have knowledge about it. You might be lucky to have good investor, but some investors as well, when they've discovered that you don't know, they can just push anything to you, you sign. So it's important you know what Series A entails, what are different things you can see in term sheets. What is important to you? Is it control? Is it ownership? And you go to that fundraise with those in mind and go for lawyer that have done Series A before, not for lawyer that they will use you as instead of learning. It's important. And lawyer that are ready to listen, that they will not make the run difficult for you. What can you compromise on? What can you blend? Because negotiating those term sheets sometimes there can be a lot of back and forth.
Yeah, spot on, Victor and Damilola. Like, I feel like you guys are answering it in like Harvard masterclass way. So spot on. And just to say what you said, like, I feel like a lot of founders don't go to experienced lawyers, and they also underestimate the impact of their legal team. And I like what you said, where lawyers that know and lawyers that are flexible, because most lawyers don't really understand the founder investor dynamics. And if they don't understand what you're optimizing for, they may take you, astray. So that's very good. And thank you, Victor, for dropping the book. That's one of most recommended books as well. I also recommend it. I think I'll ask two more questions, and if you have questions for Dami or Victor, please write it in the chat. I don't know if we'll be able to take all the questions, but I'll ask two quick questions and I'll pick some. So please just write in chat and I'll read it. And then I know that some people had sent questions ahead. I think one for Dami. So we've heard about Series A, different things they're looking for in our market today, and just so that we are practical, from what you know, what's more important? Is it you're growing fast? Is it your ARR? ARR mean annual recurring revenue, or is it the fact that your team is scaling like beyond what, or technology is great? I know technology is last, because if I scrap that in our market, it's different. But what do you think is more important to investors, or how do you see the way they like rank it in Series A?
That's a tough question, because I think like a number of things are important to the Series A investors. The ones we engaged with, even in conversations, it's almost like a number of different parameters. Market size needs to be, I've seen scenarios where the ARR is meeting the requirements, but there's doubt on the market size. And that has made things not move forward. I've actually seen that. Or that has brought in the valuation down where it's not encouraging to anybody. Do you understand? And that's something like they did not expect to have. So it's very difficult to say like one is above the other. I guess the first thing that anybody will look at is what is your ARR. Let's even know if you've cross that threshold of 2.5 M or 3 million ARR. Let's see where you are close to. Perhaps the next thing they'll look at, depending on your industry, is, what's the quality of the revenue, like the gross margins that you have. Is there concentration risk? Is it just 3 companies that are producing all this revenue? How have you been growing year on year? Depending on your industry as well, I think, are you growing in leaps and bounds 100% year on year? Are you growing above inflation and co? They'll look at that as well. So quality of revenue. Then I think the next thing, so we've market quality of revenue is at Series A, retention. So one document that I know that we've even had to create internally is the cohort analysis that we find that some people are not very familiar with. It shows the quality of your retention quality over time for different cohorts of your users, right? But also like your retention rate as well. So how sticky is the product? Because at this point, it's meant to be product market fit, right? So I would say like those 3 things kind of play like a dance. And then, like I said before, we ended up with a checklist of like almost, I was trying to count it, 40 to 60 parameters that they look out for. And any one of these things can change somebody's mind on the IC. Any one of these things. So, it could be that everybody is perfect and then maybe the founders are not diverse enough and somebody's not happy about that. But I would say the revenue quality, retention, these are the things that could immediately jump out. And then, other things can be checked on later and they might be flexible on it. And then the market, if it's not shrinking, it's a growing market, that is encouraging. If we establish that fact, then that's okay. Then we look at other things.
All right, thank you. So I'll ask one more question. And thank you, Dami. Hopefully, someday Ventures platform will share a version, even if it's just a reduced version of that we can give to the ecosystem. So when founders are asking us, we just say, go and look at this first before you come and talk to Series A. But thank you. I think there's so many questions to ask, so I'll ask one more each, and then I'll take questions quickly. For Victor, I think what everybody's thinking was there a point where you're like, oh no, this is fundraising. This is not what I woke up in the morning to do. Was there any point where you felt like it's not going to work out, and how did you push through? And this is just being practical to founders, not like, oh, everything was so good, our lead investor source online. You get like, what was like a breaking point for you that you felt, or did you have that point where you were like, I don't think it's going to work? And then what happened?
Yeah, fundraising is not easy. It's not something I like. It's distraction, time consuming. I don't think there has been any point where I kind of believe within me that it will work. There was different challenges, right? Probably you talk to like 5 investors back to back. No. Yeah, those things can be disturbing. As if everybody's telling me, no, then what's next? But I have this belief that it's going to work. Then with different no coming, it's just for us to go back to drawing board. Why are these people telling us no? Are we pitching the wrong way? Is there any wrong message we are passing? Then we try to ask them as well. So try to use those no to see how can we prevent the next no. When we were raising, I'm trying to remember the round where after getting to like 60% of the round, there was like I say 2 to 3 weeks pause before we were able to complete the round. So that's probably precede. There was like a pause of 2 weeks to like 3 weeks. But we definitely know we would definitely complete the round. It was not like, no, we are giving up, but we just have to start thinking. And that kind of helped us, because it was in that moment we realized that I think we might need to kind of pivot a little bit, because why we are getting no, it's because of XYZ. And then we look at it from customer acquisition perspective as well. This same scenario is giving us challenge in getting the right set of people we want. So that, okay, then I think we need to revise the solution. I think we need to change the way we are solving it. And when we did that, it was not just only on fundraising, there was positive change, even on customer acquisition.
Thank you, Victor. Yeah. Thank you. And I hope everybody heard that. Oh, Dami, you want to say something?
No, I wanted to say that, and because it came to my mind, is that if you're at seed, you have hopefully the gift of current investors. There's a lot of back channeling that goes on as well. So if you speak to a Series A investor, sometimes the Series A investors will come back to the seed investors and ask questions. And one of the things that we did is, if we have questions with the Series A investors that maybe have spoken to Victor, we note what they are they are not sure about, or they are concerned about. There's a back channel, goes to Victor, we sit down and be like, oh, how do we, focus on this when you're talking to them or something. So there's a lot of back channeling that goes, where your current investors are also helping you. As investors, they can see where there are concerns from a fellow investor. And they can tell you that because you already have the solution to that, you're probably just not addressing it because you think that didn't matter. So they'll be able to point to you and say, hey, this is the concern. So make sure you address it when you're talking to the investor. And I think that really helps, just having that back channeling and talking to your investors. Who am I speaking? Like, this is the person I'm speaking to. If you know them, can you reach out to see what they think as well? All of that is also important, especially from seed to Series A, because you have some investors already.
All right, that's even perfect for my next question for you, Dam. And there's so many questions we could ask, but I know that we're pressed for time, so I'm just trying to prioritize things that even beyond now people can go think about and know. So, Dami, next question is: so I know a lot of early stage VCs, Hope, ventures platforms try to not just invest in early in startups, but also provide support. So at Hope, we've had Childec raise their Series A. Raenest is also like a portfolio company; they raise their Series A. So that means you must be doing something good, right?
Yes.
So this is one of things that we do for the founders and the ecosystem. I have to plug my
Yes,
wares.
yes.
Well, like for ventures platform, one of the things that Victor said, which was also the questions that I had, was the support that they receive. So a lot of people, when they're picking investors, especially early stage, they just go for money, and it's understandable. But then there are some investors that actually provide support beyond capital. And for ventures platform, what I wanted to ask is, when supporting founders for their Series A, what are the things you do or you see VCs do that can help them become, better or ready for that Series A stage?
Yeah. Okay. We even have like a Series A program internally, because
Fantastic. And
I
I
remember
think a
we
lot of
had,
people don't know. Yeah, I think a lot of
yeah,
people don't know, but please.
we do have one internally, and it's because we actually noticed that the founders, a lot of our founders didn't realize that Series A, like, it's a big jump from seed to Series A. And so that was what led us to talking to other Series A investors and creating what we call that checklist that we then shared with all the founders. Whether you were raising Series A or not, just even go through it and see what these Series A investors are saying. Again, it benefits us because these are growth stage investors that will take up the portfolio companies that we've invested in. Once we did that, if someone else says they are ready, we say, okay. We then file into the program. But the first thing we do is actually we go to the checklist together. Like, are you really, really ready? Right? And then when will you be ready? Like, with Raenest, for example, we're like, oh, this is the ARR we have to meet to. So is that realistic? When can we meet it? We said, okay, we're likely to meet it, say, July or August or something. Okay, that means we have 3-4 months or something to hit that. How are we going to do it? So we actually have all those metrics that we then noted down, and then we put like a timeline to how we're going to reach it. And every month we're having conversations about that and tracking the progress. Within that time as well, we're then helping you with how do you like speak to the investors, which investors should you speak to now just to know what they're thinking. We are also talking to investors. We are looking at the data room as well, like what is there, what is missing, a lot of back and forth. If something is not clear, we'll ask questions like, why do you think you need all this money? If you take all this money, this is what you will have left. Another thing I think we notice is that because people have done multiple saves, sometimes they don't have a clear idea of what they actually own. So one of the things that you need to do is actually, we had like I think Carter has one, but where you can simulate your cap table and see if more money comes in, what would you own at the end of the day. That then happens and helps the conversation of what you should be raising and at what valuation as well. So once we have all those things in mind, we can let's say, all right, let's open it. Because the thing about this fundraise is that it's always good that there's no downtime or you're not getting a lot of no's at the beginning. Otherwise, it starts to slow things down or people start to get the wrong perception. So as soon as we open, we want to make sure we are getting, oh, this is interesting. Oh, it is a yes, or I'm taking it to the next step, that kind of thing. And I think, that's those are the kind of support that we give. And then, of course, all the investor back channeling relations that we do, and then just supporting and advising. I think there are certain decisions that the founders will need to make by themselves. Some of them will be tough calls, and we are just there to guide. Even decisions like, oh, which investor do I go for? Which should I take this valuation? Should I, I'm a bit flexible, but I don't know if I should still be all those decisions ultimately is yours, but we will just give you all of the different options and things to think about. So all of this, we typically wrap it up in maybe it's 9 months program, depending on when you start, where before, you kick off the raise, this is what we do. Sometimes what could happen is that we actually realize that you're not ready. So we started, we do all the checks and everything, and then all of us will realize that we are not ready for this raise. So let's just slow down. Because sometimes founders will come and say, oh, they're ready. And if you keep saying no, yeah, it's like, why are you thinking I'm not ready? Okay, let's prepare ourselves together. And then we can get 2-3 months down the line and just be like, see, we are not all ready, so let's just wait. So this is part of how we support, especially on the Series A thing. We have a program around it. So.
Thank you so much, Dami. I'm going to take one question quickly from the audience before, and I'm going to take Joe's question before, and then we'll see if we have time. So, Victor, this question is for you. You said, Victor Alade once said, that's what he wrote in an interview, that he wished Raenest had raised a lower pre-seed, and they wanted to know why. And now the reason why I'm asking this question is because I know that obviously cap table, all those things, I'm suspecting that's why, but you can share why our superstar Victor said, he raised the lower pre-seed, and then we'll pick Joe's question from the chat.
Okay, yeah. So, public disclaimer is it's not an advice, or maybe you should raise up more. I think it depends on one, what you are building. Do you require much capital at the early stage or little? And then what you can do yourself as a founder. Do you have the skills to build a company for that initial stage, or you need to hire people? And then how much you have yourself as a founder, resources you have. Do you have little money you can use in starting the company? Those are the things that should determine how much you should raise. And then what level you are you still in idea stage, or you've started generating revenue? So for us, we've started generating revenue, I think 2 or 3 months, or a month into fundraising. So before we close the proceed, our revenue has gotten to a very reasonable stage, right? That it's even covered for some of the expenses. And we had some investors we've been having conversation with that it was delayed. And then at the point they came around. So it was should I take this money? So I'll say we take some money towards the end that there was no need for it. Or just because, okay, we've been talking to this investor, relationship building, can we take the money? And then we did accelerator as well, which we all know accelerator kind of changed the way what you will give out. So that's why if we raise less proceed, because we started generating revenue, and then the targeted for that round, we've gotten to that level. I think we targeted around 500 about, but we're not raising 6 something. So maybe the extra 150 to 200, there was no need for it. And then if you think you'll be able to raise your seed faster, then why do you need to raise too much seed at a lower valuation when you can wait to raise it? So for us, it was just 6 months or 8 months after proceed we raised seed. It would have been better if we raised less proceed then. And I remember Olumide said something then that, oh, maybe you can just raise 150, 200 and then generate grow, you can raise more, but I didn't listen. So those are some of the reasons that made me mention that we should have raised less proceed, but it's not always the same case for a company. If you raise a pre-seed of 150 and you are unable to raise seed to like 2 years, how will you survive? So raise what is enough to survive.
All right. Thank you. Thank you, Victor. I don't know if Dami wanted to say something. I wanted to read Joe's question. And to be honest, like I like that the answers are practical for today's market, because you see some decks, they say they're raising $1 million, which is fine, but then they're not really thinking about like the next that the journey of, oh, you may need to raise, except you're not raising a gain for life. You know, that may take a chunk of your equity, especially if, and then other investors also look at it. I like what Dami said, where when you're in Series A, they're looking at how much you already own and you're giving out. If it's too small, it actually like discourages later stage investors, because then you don't have enough equity to give out, and you know all the investors may be frustrated. So I'll go to Joe's question quick, and I think that's the last question I'll take. Sorry, because we're out of time. For both speakers, how did the Naira devaluation play a part in your company, Victor, and in Dami companies you've looked at? Or maybe we start with Dami first. The companies I look for, how did the Naira devaluation play a part in, you know, evaluating these companies?
So, well, to be honest, at some point, we were, how do you put it? Like if you put it on a scale or something, we were looking more at companies that had, at least were earning some FX, not necessarily only Naira. So a company that was earning only Naira would not be attractive at some point. I think this was a lot of last year when the whole thing was, we didn't even know where it was going. This year, so far, it's been somewhat, you know, stable and okay. So there was a period where, in fact, even internally, we tried to look at the companies that were exposed in terms of earning only Naira versus those that had like FX income. We tried to see what the exposure was. And then even in looking at companies too, we looked at it from that lens. And if you were earning just Naira, there was just a harder case to make. Even if at the end of the day, we may still invest, it was like, is there an opportunity for them to earn in another currency? So yeah, that's how it was tough, to be honest, for companies that were only earning Naira. If you had some form of FX, or you could potentially, it was better, you had a better story, or you know, you could convince us better.
All right, thanks. And Victor, for you, during fundraising, how did people say, you have Naira?
Yeah, I was very lucky. Like, the majority of our revenue is in foreign currency, so that was a blessing during that period, and it's still a blessing now. So it has less impact. Probably it's made us to be more attractive to investors, like Dami mentioned.
All right, thank you both. Thank you so much. I know how busy both of you. Thank you. You can connect with them on LinkedIn. They actually are really great people. Victor is a likable guy, because you can see masterclass. Dami too is very likable masterclass, and they didn't come with fluff. So thank you both. Really grateful. Over to you for Akemi share updates, and thanks to everyone that joined. Just a few more updates and we should be done, like 5 minutes.
All right. Thank you everyone so much for joining. Thank you to Dami, to Yewande, to Victor for joining us this evening. Honestly, like I need to show you guys my notes, and I'm an investor. So just imagine the gems that you've dropped today. Thank you so much for joining us today. Into Oak updates, for those of you that just joining us, Oak is a community of angel investors that are backing businesses building for Africa and for Africans. We currently have shared new deals with our community on Slack via Borderless. So if you've not seen those deals yet, you just log in on Borderless to view these opportunities. So we have Money, we have Go Lemon, we have Old School. Interestingly enough, two of them, Old School and Go Lemon, are follow-on deals from our portfolio. And I think it ties into the conversation of today where we're talking about, you know, from pre-seed to seed, then to Series A. Two of them are raising seed rounds, and it's just great to follow on their journeys. Next slide. We have other deals open as well. We have Mainstack, we have Task as well. Just log in on Borderless and you will see these deals, as well as the memo that we've written, the demos, and the Meet the Founder sessions as well. Next slide. Yes, we are still around. We are moving Lagos, Houston, London, we're around. So we are going to be in all of these events happening over the course of the quarter. So if you are available in any one of them, just look for us and we would love to meet you. So we would be at Black Tech Fest, we'll be at Moonshot, we'll be at Avon Congress, we'll be at Africans at Afrotech, and we are going to be at No Skin in Kigali in November. Next slide. Yes, we also have a fund. I don't think a lot of people know this, but Yewande Odumosu, who moderated this call, is the managing partner of our fund. And Oak Fund is a $5 million fund aiming to invest in founders who are building tech and tech-enabled startups for Africa and its diaspora. So if you want to learn more about our fund, you can just go to our website and you find all of the details on there, or feel free to just send us an email. If you would like to be an investor, if you're a founder that's looking for funding, just go to our website. All of our details are on there. You can submit your pitch. You can also join our community of angel investors that are backing businesses building for Africans as well. Next slide. Yes, connect with us on socials. LinkedIn, Twitter, or X, Instagram, YouTube, TikTok, we're everywhere. If you'd like to learn more about what we do, you can just send us an email as well. Thank you so much for joining us. That's right on time, 6 o'clock. We do this every month, so we would see you next month. You can also pre-register for our events. If you go to our website again, you will see all of that there. We've had sessions every month this year, as well as since we started, to be honest. So you can also watch all our previous, recordings with different people on YouTube as well. Thank you, everyone. See you next time.